That real quick. So with the D2 entry, this is honestly my least favorite signal out of the three systems that we teach and that I trade here at ASFX. With the D2, you're normally looking for divergence against the trend to then send you into a reversal. Now, remember, divergence doesn't always mean reversal. Divergence, whenever you see it, should mean change. Change is coming. Now, change from an uptrend, change can be a reversal to see it come down, but change can also be sideways movement. So as we go through two examples, of this D2 setup this morning, just understand that the reversal does not mean, the divergence does not mean that the reversal has to happen and that it has to go all the way back. Simple, right? So if you look at this divergence here on Euro NZD, you'll see it starts at yesterday's RSI high. If I blow it up here, you'll see as the RSI has been falling, right? Price action since that time has been rising. So that sets up bearish divergence, which really is telling me that change is coming because price is being pumped higher, but relative strength is falling. And if relative strength is falling, that almost gives you a hint at the next change in trend. So with the D2, what I'm looking for is I'm really focused on the 50 EMA. And if you guys are, I see everybody in the chat, if you guys trade the D2, you know this. So once we get through the 50 EMA here at the end of the Asian session, that's 1 a.m. New York time, once we're through there for the first time, that means to me change of bias. The bias being long overnight, that bias is now changed right here. When we come down through the 50 EMA for the second time here, making a lower high, now have three lower highs off that divergence high. That's where we look for the D2 entry. This is my favorite D2 setup. You can do the D2 using the 1 minute, absolutely. I'm just not big on that. Really, it's just not where I find my strength. I find my strength after we see the 50 EMA broken, retested, and then that retest confirms for me, kind of like what I just showed on Euro USD before with the support turned resistance. It confirms that the 50 EMA was support, and now it's resistance to see this come down to the 200 EMA, which is the white line down here. So to me, when I look at these D2 setups, because I know divergence means change, I never would anticipate for the divergence to send us from the 50 EMA through the 200 EMA down to the 800 EMA. When that does happen, we call it full reset. But today, when we're looking at it from the 50 to the 200, what I would do if I was awake at this time, I would look to read risk reward to the next EMA, to the 200 EMA. Because sometimes you're going to have setups with a D2 where the 200 EMA is right here, right, like this close to the 50 EMA, and you're not going to want to take that trade because you know it could bounce off the 50 and come higher, or bounce off the 200 and come higher. But here, as you can see, I've got 2R to the 200 EMA. Now, the 200 has moved up a little bit as the trade has moved on. So of course, that would change a little bit now, 1.78, but still pretty good risk reward to the 200 EMA if you ask me. And that's why I have this marked up. This is definitely going to go into the back testing. This fits the bill for a D2 signal. Now look at how similar this looks to Euro AUD. I actually like Euro AUD on the structure side better. The reason for that is because you didn't even get a pop back through the 50 EMA here. It broke once, retested it, so it broke the support. See, 50 EMA was support overnight. Comes down off it, confirming support is now resistance. You have about 1.2R to the 200 EMA. That's the only thing that I didn't like about this setup. If this had the risk reward that you have over here on Euro NZD, then it would be a really, really great D2. Here, however, what you would, and really on any D2, what you're going to watch for is, does it body the 200 EMA? You see how it's throwing a pin to it right now? If it throws a body through the 200, then it would be safe to say, okay, this could fall to the 800, to the 800 EMA today. So when you're reading risk reward, make sure you're going EMA to EMA with the D2. And even with the D1 or an A1, you always should be looking at the zones in your way and the EMAs in your way. But in particular here, if you can't get 2R to the next EMA on a D2, it's not really worth it in my opinion, because those reversals sometimes can be wrong. Sometimes this can hold right here and end up coming higher. D2 trades are always going to be a little bit trickier. Where you can find a little confirmation in the D2, if you look where I have this synced up as it comes off the 50, as it comes off the 21, on the 15 minute, look at the 1 minute market sentiment line. It's in the sell zone at the time of the entry signal on the 15 minute. And if all you did was watch the 1 minute market sentiment line, it would tell you to stay in the trade, stay in the trade, stay in the trade. It pops into the buy zone here, but you're already in profit. So your stop loss could be locked once it pops up into the buy zone. And now that it's back in the sell zone under that 50 value, now you would expect this to continue lower. So if I was in this trade, I would just be moving my stop loss down, taking profit as it falls. That's how I would watch the D2. That's how I manage the D2. And same thing for Euro NZD. You're going to watch to see what this does when it reaches the 200 EMA right here. But if you look at this entry, at the point of entry, market sentiment is in the sell zone, held the sell zone, held the sell zone, stayed in the sell zone. It pops into the buy zone here, a little bit closer to your entry price, so that's not super great, right? But again, with the D2, you got to be willing to let it hold that 8 EMA, hold the 8 under the 21, and let the thing fall. Give it time. Really, that 8 and 21 EMA will save you so much money. No matter which entry signal you're trading, A1, D1, or D2, if you watch to trade when the 8 and 21 EMAs are in the right direction, meaning if you're looking to short it, the 8 is under the 21, if you just use that as a simple rule to find higher probability trades, not for entry, but when you look to take the trade, when you go through the rest of the list, make sure you're trading, we call it a shift, when the shift is in your direction. If you're going short, the 8 should be under the 21. And if you're going long, the 8 should be above the 21 for a high probability setup. Of course, there's going to be lower probability setups where that still works for you, and that isn't the case. But if you ask yourself what could be better, clearly if you're buying it, you'd rather have the 8 above the 21 than below because it's in a short-term uptrend then. And why that's important is because then it gives you a barrier to know if you should get out of the trade or not. If it holds that 8, holds the 21, then you know that trend is continuing and you want to stay in the trade. But if it starts to break back up through the 8 and break back through the 21, then that would be a sign that the trade is done. So these were the D2 trades, the two entries on Euro NZD and Euro AUD from overnight last night at about 3 a.m. These were the two that we're watching as the morning goes on. These will get marked up. And now hopefully after I've explained it to you, you guys understand the D2 a little bit more. Little tip on the D2, once it retests the 50 EMA, with it moving off the 21, it's a good entry, puts you in the trend. Yep, that's exactly what I'm saying, Dennis, with the shift. I've been on learning the A1. Think I found USD CHF 1030 GMT, which is 630. Yep, I could take a look at that in a second. Nice. Okay, so we got some D2 traders in here. Nice. Yep.